Madrid, September 1st, 1575. The King of Spain just destroyed 50 banking families with a single signature. No war. No invasion. No plague. Just a decree. 3 words in Royal Spanish. I cannot pay. Millions of gold ducats. Vanished. Fortunes built over generations. Gone overnight. The most powerful empire on earth had just declared bankruptcy. And the men who'd made that empire possible, they were about to learn a brutal lesson about lending money to kings. The story begins a century earlier, 1453. Constantinople falls to the Ottomans. Ancient trade routes to the east slam shut. European merchants scramble for alternatives. The Republic of Genoa, watches calculates, daps. Genoa wasn't the biggest Italian city-state. Venice held more territory. Florence had more artists. Rome had the Pope, but Genoa had something more valuable than any of those. Genoa had bankers who understood something radical. You don't get rich by owning things. You get rich by owning debt. The Genoese banking families read the future in numbers. The Grimaldi, the Spinola, the Doria, the Centurion. Names that meant nothing to peasants but everything to princes. They looked at the map of Europe in the late 1400s and saw opportunity written in blood. Spain was rising. Ferdinand and Isabella had united Aragon and Castile. They'd conquered Granada, expelled the Moors, funded a Genoese sailor named Columbus who stumbled onto an entire new world. By 1500, Spanish ships were returning from the Americas loaded with silver. Mountains of silver, more precious metal than Europe had seen in centuries. But here's the paradox. The secret that built fortunes. Spain had infinite silver coming, but Spain needed gold now. Wars don't wait for ships to cross the Atlantic. Soldiers demand pay today. Weapons cost money immediately. Allies require bribes in real time. The Genoese bankers saw the gap. The space between future wealth and present need. They would become the bridge, the mechanism, the system. 1516. Charles I became King of Spain. 3 years later, he became Charles V, Holy Roman Emperor. One man now ruled Spain, the Netherlands, parts of Italy, vast American territories, and held nominal control over the German states. The largest empire since Rome, and empires require one thing above all else: money. Charles V needed to fight everyone. The French, the Ottomans, German Protestant princes, Italian city-states, North African pirates. War on every border. War across 3 continents. Spanish treasury couldn't keep up. Even with American silver pouring in, enter the Genoese. They created a system called the asiento, a contract, simple but elegant. The Spanish crown would promise to repay loans with interest. The collateral? Future silver shipments from the Americas? The treasure fleet sailed from Mexico and Peru. The Genoese would advance money immediately. Charles could pay his armies today. When the silver arrived months later, the Genoese would take their cut. Everyone wins. In theory, 1520s, the system worked beautifully. A Genoese banker named Ansaldo Grimaldi met with Spanish officials in a palace in Madrid. Candlelight gleamed off gold-threaded tapestries. "How much do you need?" Grimaldi asked. 400,000 ducats. For the German campaign? Grimaldi didn't blink. The interest rate? 18%. Make it 22. We want first claim on the next 3 treasure fleet arrivals. The Spanish official hesitated, then nodded. What choice did he have? The contract was signed. Money flowed. Armies marched. The asiento system became the engine of Spanish power. Every major campaign is funded by Genoese credit. Every victory was bought with borrowed gold. 1540s. The debt grew. Charles V borrowed more. The Genoese lent more. Interest rates climbed. 20%. 25%. 30%. Why such high rates? Risk. Lending to kings is dangerous. Kings can't go bankrupt, can they? Ships sank. Treasure fleets arrived lighter than expected. Wars cost more than projected. The Genoese bankers diversified. They didn't just lend to Spain. They lent to the Pope, to the Duke of Savoy, 2 merchant companies. But Spain was the big bet, the whale. The customer who could make or break entire banking houses. 1556. Charles V abdicated, exhausted, broke, disillusioned. His son Philip II took the throne. Young, ambitious, utterly convinced of Spain's divine mission. Philip looked at the empire's finances. The debt stood at 36 million ducats, 7 times the annual revenue of the Spanish crown. Unsustainable. The Genoese bankers tried to warn him. Your Majesty, you must reduce military spending, negotiate peace, let the debt stabilize. Philip II stared at them with cold eyes. Spain does not negotiate with heretics. God will provide. 1557, just 1 year into Philip's reign. A treasure fleet arrived, smaller than expected. Storms had delayed ships. Some sank. Philip needed to pay his army in the Netherlands. Protestant rebels were gaining ground, but the money wasn't there. The Genoese demanded payment on existing loans before extending new credit. Pay what you owe first, Your Majesty. Then we'll discuss new funds. Philip refused. I need money now. The heretics won't wait. The standoff lasted weeks. Then Philip signed a decree. Spain would restructure its debt, suspend payments temporarily. Forced renegotiation of terms. Wasn't officially bankrupt, but it felt like it. The Genoese banking houses absorbed losses. Some families lost fortunes. But they couldn't abandon Spain. Too much already invested. Too much at stake. Within months, they were lending again, at even higher interest rates. The system creaked, but survived. For now. 1560. Another crisis. Another restructuring. The pattern emerged. Spain would borrow. Fight wars. Running out of money. Declare inability to pay. The Genoese would lose money. Then lend again because the alternative was losing everything. It was a trap. A financial prison. The Genoese couldn't escape because leaving meant writing off decades of investment. 1571, the Battle of Lepanto. Spanish and Allied fleets destroyed the Ottoman navy. A glorious victory. Funded entirely by Genoese credit, Philip II stood in the Escorial Palace, his face radiant. God has blessed Spain. The infidels are defeated. His finance minister whispered in his ear, Your Majesty, the cost of the fleet? The Genoese are demanding payment. Philip waved his hand dismissively. There will be more silver. There's always more silver. But there wasn't. Not enough. 1575 approached like a storm. The treasure fleets arrived late. Dutch rebels seized silver shipments. French purveyors captured Spanish ships. The Genoese loans came due. Millions of ducats. Interest compounding. The numbers no longer made sense. August 1575, Genoa itself was tense. Banking families gathered in private meetings. We must stop lending. Spanish crown will never repay us. If we stop, we lose everything we've already lent. If we continue, we lose even more. No good choices. Just different kinds of disasters. September 1st, 1575. Philip II signed the decree. Spain would suspend all debt payments indefinitely. All existing loans converted to long-term bonds. At lower interest rates. Payable, eventually, maybe. The news reached Genoa by messenger ship. September 10th, 50 major banking families faced ruin. The Grimaldi family alone lost 2 million ducats. Spinola lost more. Suicides in Genoa, bankruptcies, ancient family names destroyed in a single season. But Philip II slept soundly. God would provide. Spain would endure. The question that haunted every counting house in Europe, would the Genoese ever lend to Spain again? And if they did, what did that say about the nature of power, debt, and delusion? The year after bankruptcy should have been the end. Logic said so. Mathematics said so. But empires don't run on logic. 1576. Philip II needed money again. More wars. There are always more wars. The Dutch rebellion intensified. Protestant England grew bolder. The Mediterranean still needed defending. Spanish armies in the Netherlands hadn't been paid in months. Soldiers mutinied, sacked entire cities. The famous Spanish Fury terrorized Antwerp in November 1576. 2,000 civilians killed by unpaid Spanish troops. All because Philip couldn't pay his own army. The Genoese bankers faced an impossible choice. They'd lost millions in the 1575 bankruptcy. Some families were ruined. But others still had capital, resources, networks spanning Europe, and they still had Spain completely dependent on them. No other banking system in Europe could move money the way the Genoese could. No one else had their networks, their experience, their infrastructure. Philip II sent envoys to Genoa. 1577. The king regrets the recent difficulties. Spain values its partnership with Genoa. New terms are available, more generous terms. The bankers sat in their palazzos, overlooking the Mediterranean. Grand marble halls, centuries of accumulated wealth surrounding them. More generous? One banker said. He still hasn't paid what he owes from before, but he will pay, eventually, and the interest rates he's offering, now 40%. The room fell silent. 40% interest on a loan to the richest empire on earth, backed by American silver. If Spain could just avoid another bankruptcy for a few years, the profits would be extraordinary. The Grimaldi family, still reeling from their losses, agreed to lend. Then the Spinola, and others. They couldn't help themselves. The returns were too tempting. The alternatives are too limited. Where else could they invest such enormous sums? Land, trade. Nothing offered comparable returns. So they lent. Again, 1580s, a decade of massive lending. Spain conquered Portugal in 1580, inherited the Portuguese Empire, Brazil, trading posts in Africa and Asia. On paper, Spain's wealth seemed limitless. The Genoese doubled down. New asientos are signed every few months, money flowing to Spanish treasuries, silver flowing back from the Americas. For a few years, the system functioned. Everyone made money. The debt grew, yes, but so did Spanish power. 1588. Philip II launched the Spanish Armada against England. 130 ships, 30,000 men. The largest naval invasion in history, cost 10 million ducats. Funded by Genoese credit. The Armada sailed in May. By August, it was destroyed. Storms, English fireships, strategic disasters. Spain lost half the fleet, lost the investment, lost the war, but still owed the money. The Genoese began to understand something terrible. They weren't bankers anymore. They were hostages. Every loan to Spain made it harder to stop lending. Every loss meant they needed Spain to survive just to recover their previous losses. It was the gambler's fallacy on a national scale. Just one more hand. Just one more bet. Eventually we'll win it all back. The 1590s arrived. Philip II aged. His empire frayed. Wars in France. Wars in the Netherlands. Raids on Spanish treasure fleets. Inflation inside Spain as silver flooded the economy, but goods grew scarce. The treasure fleets arrived, yes. The silver went straight to debt payment. Nothing left for government operations. Spain started minting copper coins mixed with silver, debasing the currency. A desperate move, the Genoese noticed. Currency debasement meant their loan repayments would be worth less. Inflation ate their profits. They demanded payment in pure silver or gold. No mixed currencies, Spain agreed. I had no choice. 1596. Another treasure fleet lost. Pirates captured 6 ships off the Azores. 4 million ducats gone. Philip II called his advisors. His finance minister presented the numbers. Your Majesty, we owe the Genoese 14 million ducats in immediate debt. We have 2 million in the treasury. The next fleet won't arrive for 4 months. Philip II was 69 years old, sick, exhausted, gout crippled his legs. What do you recommend? Asked Grapsy, Your Majesty. Again. November 29, 1596. Philip II signed another decree of bankruptcy. The second of his reign. All debt payments suspended. All contracts nullified. Forced conversion to long-term bonds at government-determined rates. The news reached Genoa in December, and this time the bankers didn't panic. They'd been through this before. They knew the drill. But something was different. Something had shifted. The younger generation of Genoese bankers started asking questions the older generation had ignored. Why do we keep lending to Spain? Tradition? History? There's no alternative. What about the Dutch? They're winning the rebellion. Amsterdam is growing rich. Their credit is good. The Dutch are rebels. Protestants, not reliable. They pay their debts. Spain doesn't. The argument spread through Genoa's banking community. The mathematics were undeniable. A 40% interest rate means nothing if the borrower never pays. A 5% interest rate from a reliable borrower is worth more than 40% from Spain. But the old families, the ones who'd lent to Spain for 3 generations, couldn't accept it. Too much pride, too much history. Too much is already lost. 1598. Philip II died. September 13th. His son Philip III inherited an empire drowning in debt.
100 million ducats.
20 times the annual revenue of the Spanish crown, mathematically impossible to repay. The new king's advisors tried to negotiate with the Genoese. New terms, fresh start. Your families in Spain have been partners for over a century. Some Genoese families agreed to lend. Smaller amounts, higher rates, 50% interest. But others started quietly shifting their capital, moving money to Amsterdam, to Frankfurt, to London. The exodus began slowly, not obvious, but unmistakable to those watching carefully. Early 1600s, a new pattern emerged. Spain still borrowed from the Genoese, but less. The amounts shrank. The terms grew harsher. Spain started borrowing from others. German banking houses, Portuguese financiers, even some Dutch merchants are willing to lend to their enemy for the right price. The Genoese monopoly was breaking. 1607. Philip III declared another bankruptcy, third in 50 years. By now it was almost routine. The Genoese barely reacted. It built the losses into their calculations. But something else was happening, something that would change finance forever. The Dutch East India Company was founded in 1602. It raised capital from thousands of small investors, issued shares that could be traded, created a public market for investment. You didn't need to be a Genoese banking family to invest in an empire anymore. Anyone with spare money could buy shares. The future of finance was being born in Amsterdam. Open, transparent, diversified. The Genoese model closed. Secretive concentrated was dying. 1627. Philip IV declared yet another bankruptcy. The Genoese barely participated in the negotiations. They were done, exhausted, beaten. Over a century of lending to Spain, 3 generations of banking families. What did they have to show for it? Enormous paper claims on a government that would never pay. Bonds worth a fraction of face value. Promises written in ink, on documents gathering dust. The question facing European finance in the 1630s wasn't whether Spain would pay. The question was, what comes next? Who fills the void? What replaces an empire built on debt it can never repay? The answer was emerging in the canals and counting houses of Amsterdam, and it looked nothing like what came before. The 1630s and 1640s told a story written in the balance sheets of competing cities. Genoa's banking palazzos grew quieter, fewer ships in the harbor, fewer fortunes being made. Amsterdam's exchange hummed with activity, new money, new methods, new ideas. The Genoese banking families didn't collapse in a single dramatic crash. That would have been cleaner, easier to understand. Instead, they faded. Slowly, painfully. Death by 1,000 cuts. 1647. Spain declared bankruptcy again, 5th time in 90 years. The Genoese didn't even send representatives to the negotiations. What was the point? They'd never be paid anyway. The Grimaldi family, once among the richest in Europe, sold their Genoese palazzo in 1652, moved to Monaco, became princes of a tiny coastal territory through marriage and diplomacy. Better to rule a small principality than be ruined bankers in a dying financial capital. The Doria family retreated into aristocratic obscurity. Their palace still stands in Genoa, beautiful, empty of the power it once held. The other great families faced similar fates. Some maintained wealth through diversification, others lost everything. But none maintained their position as Europe's financial kingmakers. The final insult came in 1656. Spain asked Genoa for another loan. For old time's sake, the response from the Genoese banking consortium was 3 words. Find someone else. The shift in European finance happened faster than anyone expected. Amsterdam became the new center of global capital. The Amsterdam Exchange, founded in 1602, created something revolutionary: public markets, where anyone could invest, where prices were transparent, where shares could be bought and sold daily. The Dutch didn't lend to kings based on personal relationships. They didn't make secret deals in marble palazzos. They created instruments, systems, markets, government bonds traded publicly. Companies raised capital from thousands of investors. Risk was spread across populations, not concentrated in a few families. The Dutch East India Company generated returns that made Spanish silver look quaint. Trade, not tribute. Production, not plunder. England watched, learned, copied. The Bank of England was founded in 1694, explicitly designed to lend to the government, but with public accountability, transparent terms, market-determined rates. Everything the Genoese system wasn't. By 1700, Genoa was a backwater, beautiful but irrelevant. Its golden age a memory. It's a city that had funded empires couldn't even fund its own defense. When foreign armies threatened, Genoa paid tribute, accepted subordination. The banking families who remained became what they'd always feared: ordinary aristocrats living off old money with no new fortunes to make. But the Genoese left a legacy. It's not the one they intended. They proved something crucial about sovereign debt, about lending to governments. Governments can't go bankrupt, not really. They can restructure, suspend payments, declare moratoria, but they endure. That makes them both the safest and most dangerous borrowers. Safest because a government, especially an empire, never truly disappears. Spain still exists. The Spanish crown still exists. It's most dangerous because governments face no consequences for default. No king went to prison for not paying the Genoese. Philip II died peacefully. Philip III, Philip IV, they all died as kings. The Genoese got nothing but worthless paper. Modern sovereign debt markets learned this lesson. Slowly, imperfectly. International institutions emerged: the International Monetary Fund, the World Bank, systems to manage sovereign debt crises. But the fundamental problem remains. When a government can't or won't pay, who enforces collection? Who holds them accountable? The Genoese system also taught another lesson about concentration of risk. They put all their eggs in the Spanish basket: one borrower, one empire. When Spain failed, they failed. Modern banking learned diversification. Portfolio theory. Don't lend everything to one entity, no matter how powerful they seem. The fall of the Genoese coincided with the rise of public markets. That's not a coincidence. That's cause and effect. Secret deals between bankers and kings couldn't scale, couldn't adapt, couldn't survive transparency. Public markets could, did, do. Every stock exchange traces its lineage to Amsterdam. Every government bond market operates on principles developed in opposition to the Genoese model. Even the language of modern finance rejects the old way. We talk about market rates, not negotiated rates. Public disclosure, not private arrangements. Regulatory oversight, not personal relationships. The Genoese represented finance as a relationship, as trust between powerful families and powerful rulers. That world died, had to die. Couldn't scale to the global economy emerging in the 17th and 18th centuries. The Genoese bankers who funded Europe's wars teach us something uncomfortable. You can be right about everything, except the most important thing. They were right that Spain would dominate Europe, right that American silver would flow for centuries, right that empires need financiers. They were wrong about one thing. They believed power would honor its debts. It won't. It doesn't. It never did. Power makes promises when it needs you. Break them when it doesn't. The Genoese thought they were indispensable, that Spain needed them so badly that payment was guaranteed. They learned what every lender eventually learns. The borrower who needs you desperately today will ghost you tomorrow. The genius of modern financial systems isn't that they prevent default. They don't. Governments still default. Companies still fail. The genius is diversification, transparency, markets that spread risk across millions of participants, instead of concentrating it in 50 families. When Spain defaulted in 1575, it destroyed the Grimaldi family. When Argentina defaulted in 2001, individual bondholders lost money. But the system survived. The markets continued. That's the real legacy of the Genoese. They showed us what not to do. Don't lend everything to one borrower. Don't trust power to honor promises. Don't build a system that depends on personal relationships. Build markets. Build institutions. Build systems that can survive individual failures. The marble palazzos still stand in Genoa, beautiful, empty of the power they once held. Walk through them today. Feel the ghosts of men who thought they controlled the fate of empires. They controlled nothing. Not really. Not in the end. Because in the game of thrones and treasuries, the house always wins. And the house is never the banker. The house is always the king. The history of money is the history of power. And power never pays its bills if it doesn't have to. If you want to understand how finance really works, how empires really fall, how the world economy really evolved, subscribe for more deep financial history documentaries. Because the past isn't just history. It's a warning about what happens when you trust promises from those who don't need to keep them.